Hi, everybody. This is Patrick Montesdeoca once again with the Equity Management Academy Live Trading Room. This is a special update for the E-mini S&P 500 futures contract on May 29, 2019. I wanted to take the opportunity to do this special podcast here because the price action of the E-mini S&P is at a very, very critical level. Relationship regarding the daily signals produced by the artificial intelligence of the variable changing price momentum indicator, and also the weekly signals. And particularly when we find this relationship where it is right now, which essentially the price of the daily chart that you see here on the left is at 2782.25. The buy to level was 2774. And these are the daily signals as we come into today. The low today that was made was 2766.25. And the market on the daily coming back up above the 2774 activated a buy trigger point using the daily signals or the daily activation trigger points for day traders. I want to open up the conversation a little bit and point to you that on the right we see the weekly chart, and the numbers on the weekly chart as we come into this week, which were published in Seeking Alpha on Saturday, told you that as we come into this week, the buy to level is 2767. The buy one level is 2800. And the market, as we came into this week, traded below 2800 and now has activated the buy two level of 2767. What is important here to point out to you is that when the VC PMI artificial intelligence identifies the price to be in this color, in blue, it represents that this area is the highest probability mathematically of accumulation of demand, where you can expect buyers basically to appear. And the artificial intelligence tells you that on the weekly chart, on the weekly signal, coming into this week, when the market was trading above 2800, told you that if the price comes down and activates the 2767 and it closes above it after the setup is in place, it activates a weekly trigger point, a weekly buy signal with a 95% probability that the reversion should unfold from here towards the mean back up to 2838. And so it automatically creates the structure for you of the trigger point, very specifically of time and price. At 8:45 a.m., the signal came in. And our subscribers, our traders here are prepared with this information ahead of time on the weekly reports, the daily reports, and the monthly reports. If we look at the daily signals, the buy to level was 2774. The market activated a buy signal at 9:15 a.m. at 2775.56. If you're a day trader, automatically the structure of the VC PMI artificial intelligence identifies for you your stop level. Your stop level is the level below, which is 2774. You're long from 2775.56. Your stop is 2774. Your first target is 2789. If you have multiple positions, you can sell part of it here, go back to neutral, wait for the market to validate, confirm on a close about 2789, which will be activating the upper target of 2815. So What I want to point out to most traders that are following this in marketplace or in YouTube, or basically our traders and subscribers, is that the VC PMI artificial intelligence gives you a very specific structure for you to trade. It identifies the average price, which in this case it's the green level of 28.15, and it tells you that the extreme below that average price on the daily is 27.89. The second level is 27.84. The thing to understand is that on the daily program, the buy one and buy two levels, once again, are identified as the highest probability of finding buyers, finding demand. The artificial intelligence tells you once it touches that level, if it closes above, it activates the trigger point. If it's from B2, it's 95% probability. The first target is 27.89. Second target is 28.15. When the price reaches these levels, you go back to neutral. This is the logic and methodology that follows the daily, the weekly, and the monthly signals in the same fashion. The difference is the criteria. The data is used differently based on the weekly data, based on the monthly data, based on the daily data. The weekly signal here went long at 27.69. The stop is 27.67. The market is 27.83.75. Your first target is 2800. A close above 2800 is 28.38, which is the mean. So what we have here is that the reversion to the mean has confirmed a buy trigger point on the daily charts from 27.74, the weekly from 27.67, with 95% probability that the price will revert back to the mean. The daily mean is 28.15. The weekly mean is 28.38. This is what we call a harmonic alignment in the trends as defined by the artificial intelligence of the variable changing price momentum indicator.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.